Welcome to USMK Insights, where we focus on US stock technical analysis. Using charts, trends, and price action will help you understand the market rhythm and make informed buy and sell decisions. Alright, hit subscribe and let's begin today's learning journey. The US stock market really feels like a drama series. There are constant twists and turns. Today, another major headline just dropped. This time, it's about tariffs. U.S. tariffs are facing a major shakeup. The U.S. Court of International Trade on May 28th issued a major ruling. A highly important decision. It blocked the Trump administration's April 2nd tariff policy. Specifically, this was about global tariffs. The court ruled Trump's tariffs imposed due to trade deficit were an overreach of authority, so the policy must be stopped. This news sent a shock through the markets. On the news, all three major U.S. stock index features soared. Nasdaq features jumped over 2%. S&P 500 features rose 1.71%. Dow Jones features were up over 1%. So at today's open, the three indices should show strong gains. When the market opens, all three indices are expected to perform strongly. With this court ruling, many people have questions. A lot of friends are wondering, what's so special about the U.S. Court of International Trade? What power does it have? How can it override the Trump administration and block a trade policy? How can it stop Trump's actions? Actually, the Court of International Trade was formerly known as the U.S. Customs Court. What's its jurisdiction? What power does it hold? It can rule on tariff and trade disputes across the U.S. It has nationwide authority over these issues, so it does have decision-making power here. It has real authority. But it usually operates out of the public eye, so most major media rarely mention it. Even many lawyers know little about it. It's rarely discussed in the legal world, but it really can halt Trump's tariffs. Of course, Trump can appeal this international trade court decision. The Trump administration can take it to a higher court, even up to the U.S. Supreme Court. So right now, the Trump administration has already filed a notice of appeal. How did the market react to this news? How is it being interpreted? Judging by market response, it's seen as positive. If the Trump administration appeals to the federal circuit and requests a stay, and if that's granted, then tariffs could temporarily resume during the appeal. But if a stay isn't granted, tariffs would remain suspended during the appeal. So the appeal process would take 6 to 12 months, which is a long time frame. It all depends on the court's schedule and case complexity. So this process will take quite some time. It won't be resolved quickly. Ultimately, the outcome depends on the court's decisions. So for now, in the short term, Trump's tariff policy remains uncertain. If Trump loses the appeal, even though the White House may seek other legal avenues to pursue its goals, it means that if court issues an injunction, the tariffs could be halted. That would make things even more complicated. What happens next? Where does it go from here? No one in the market can say for sure. There's no clear signal. But at least for now, market sentiment is boosted. That's a real effect we're seeing. This event has lifted sentiment for now. We can't predict the ultimate outcome yet, but at present, the immediate impact is clear. It's a boost for sentiment. Mainly, it's an emotional lift for the market, but it's not a structural change, just a short-term boost in the market sentiment. So right now, we're waiting for the U.S. market to open. The three major indices should all open strong. We expect a strong move. As for individual stocks, how will they be affected? So for individual stocks, let's take Google as an example. Google is one of the 7 major tech giants. How does this affect Google? The impact is mainly on sentiment. It gives the stock a boost, but its own fundamentals matter more. For most stocks, positive market sentiment can trigger some movement. Stocks will react, but real performance depends on the company itself. Let's use Google as a case study. Recently, Google had some good news, specifically in AI search. Google just unveiled its AI search tool. This is Google's flagship AI search feature. Why did they launch this now? Why release AI search? Because previously Google took a hit, specifically from Apple. They lost ground to Apple. For Google, especially this year when Apple launched its own AI search function, the market reacted negatively toward Google. There was a strong bearish sentiment. Investors turned pessimistic. Selling pressure increased. You can see here, On May 7th, on that day, why did Google drop so much? Because Apple announced it would add its own AI search to its browser. The market overreacted. This issue is something Google needs to watch closely. Because if Apple really develops its own AI search engine, think about it. Even if Apple only takes 10% of users, just a fraction. If Apple builds its own search tool, Google could lose billions in ad revenue. Even a 10% loss is huge. That could wipe out billions in revenue. That's why when this news broke, Google's market cap dropped by $150 billion. That's a direct reason. It all comes down to this. But as you can see, even after such negative news for Google itself still held up well. The stock stayed strong. It bounced at the lows. The market took it as a buying opportunity. Investors bought the dip. As a result, the price quickly rebounded. A lot of buying came in, so the share price climbed back up fast. Google's fundamentals are solid. Its core business remains strong. Google's moat is actually deeper than many realize. Why that? First, Google's Q1 revenue this year grew by 12%. Cloud revenue jumped 28%. Profit margins keep rising. They are still growing. So Google's overall strength keeps improving. Its moat is deeper than you might think. Globally, about 90% of searches still go through Google. Users are very used to using Google. It's not something that will change overnight. This isn't easy to replace. That behavior can change in the short term. And Google also has YouTube and Google Cloud. These two growth engines are not affected by Apple at all. This year, Google Cloud revenue is expected to reach $38 billion. YouTube ad revenue should hit around $39 billion. Plus, Google itself is heavily investing in AI search development, pushing R&D in search. So fundamentally, Google is in a strong position. Its fundamentals are solid. It's all about real strength. That's why Google's own performance still gives the market a lot of confidence. Investors remain upbeat. We can see Google's recent price action is clear. After the earlier pullback, the stock has stabilized. After stabilizing, it's clearly trending upward. The price has broken above the 20-day moving average. It's holding above that trend line. The 20-day average hasn't fully crossed the annual line yet, but it's showing strong upward momentum. Once it firmly holds above the yearly average, the uptrend will be confirmed. With this trend, we can expect a strong continuation. Google's underlying strength is clear. Its finance is stronger than many expected, so there's solid support for the stock. The upside potential remains strong. Plus, with the shift in overall market sentiment, especially after these two events, the market is turning more optimistic. We are seeing a more positive mood. For these high-profile tech giants, especially Google, the trend is quite steady. Looking at Google's chart, the price action is stable. Long-term, the uptrend is still intact. There's more room to run. Right now, technically, there is some resistance. You can see that from the upper weeks. Two upper weeks have formed recently. Both rallies saw selling pressure at the top. Each attempt higher met resistance. We saw upper shadows. So on the pullback, volume didn't really expand. There was no strong follow-through. So overall, the market is still in a wait-and-see mode. Everyone's watching today's open. If the overall market is strong, especially if we get a clear signal, the key will be a breakout in volume. A real volume increase across all three major indices would show healthy market participation. That's what we want to see, steady volume growth. What matters most is seeing real money flowing into the market. When we see actual funds coming in, it shows strong confidence. Active participation is how true confidence is built. Sentiment only matters if there's real capital. Without new money, it's just hype. Volume is the key. That's when confidence really takes hold. Otherwise, it's just short-term excitement. No matter how high sentiment runs, if it doesn't materialize, there's no real conviction. No real funds, no real trend. So sentiment's impact will be short-lived. When we assess the market, we need to see real results. How much real flow through is there? That's the key. If there's no real capital flowing in, the rally could be short-lived. Sometimes just a single day. A rally might last only one day, then quickly fade. So we need to focus on whether the major indices can see meaningful volume. Watch the three indices. Will volume increase? We don't need huge volume, just a steady uptick. We don't need a massive spike. Even a slight increase is a good sign. If volume rises, it shows confidence is coming back. That makes a continued rally more likely. So for Google, its own performance isn't a concern. The price trend remains steady. You can see here, even after a sharp sell-off on high volume, there was a big bullish reversal. The sell-off had volume, but Google didn't make new lows. No new lows were set. Despite the negative headlines, Google didn't break down. Instead, it rallied back in just a few days. Another rally pushed higher. It recovered all its earlier losses, all within about 5 days. 1 day, 2 days, 3, 4, 5 days to recover fully. In just 5 days, the whole loss was erased. The full candlestick reversal. All the losses were recouped. That shows how strong Google really is. Because Google has real strength, the market recognizes its growth. So it gets very optimistic expectations. That's why every dip brings new buying opportunities. People buy the dip. That's why the uptrend has become even clearer. So let's make a prediction. Where could it go next? It could retest its previous high around the 200 level. First target 200. That's the initial level, especially around here. There is some resistance at that point. If not 200, then 185. 185 is a key area. So in the next week or two, reaching that level is quite possible. Testing that area shouldn't be difficult for Google. That level is not a huge challenge. It's not too far away. It's very achievable, not hard to reach. So we can make a modest prediction. Where could Google go next? Within the next 2 weeks, 185 is very possible. It shouldn't be difficult for Google to reach that mark, so we can confidently make this call. If you're interested in Google and have your own ideas or your own views, feel free to leave a comment below and let's discuss together.